Stocks gain with the benchmark Nifty index stamping 24,000 after foreign investors buying last week. Energy and power stocks are the biggest gainers even as FMCG drags. Nifty Bank hits a record high, mid-caps outperform. Private heavyweights HDFC Bank and ICICI Bank power up banking stocks after beating profit estimates in Q4. Good deposit growth, pristine asset quality and healthy margins underscore a strong show. Eversource Capital may be in advanced talks to buy a beloved ride-hailing player Blue Smart. A deal will likely involve the promoters Jaggi brothers as well as stepping down as well. US Vice President J.D. Vance arrives in India even as bilateral trade talks are expected to have made good progress. Experts believe talks between Vance and PM Modi will extend beyond trade to other strategic issues. China warns trade partners it will undertake countermeasures in a resolute and reciprocal manner if they strike trade agreements with the United States at the expense of China. Hello, good afternoon. You've tuned into Business Lunch coming live from the CNBC-TV18 Motilal Oswal studios. I'm Vinny Motiwala and thank you so much for tuning in as always. It's a good Monday that's shaping up for the markets, right? We're seeing that momentum in terms of the gain continuing that we saw last week. Today, as of now, also the Nifty is up almost 330 points in the trading session. Day's highest point, 1.4% uptick is what the Nifty is managing to hold on to. Nifty Bank, obviously among the top gainers coming in there, 2% gain there. PSU banks are also doing well. Do not forget we had those earnings that came in for the private banks, whether you look at HDFC Bank, ICICI Bank. Good set of numbers coming in from both these big banks, and that is something that is supporting the overall momentum in terms of the move coming in as well. Broader end of the market, let's look at that. What is that doing? Nifty mid cap as well as a small cap managing to hold on to good gains as well. Outperformance coming in on that front. 2.4% gains for the Nifty mid cap, small cap holding on to gains of 2% as well. Energy stocks, those are the ones that are buzzing in trade as well. So keep an eye out on Nifty Energy overall as well. That's among the top sectoral gainers. FMCG, that's a bit subdued in today's trading session. A bit of a decline that we're seeing on that front. But yes, all in all, that's how the market shape setup as of now is looking like. Not a bad day coming in, building up in terms of the momentum that we are seeing for the markets, and some of the broader end of the names on the back of earnings are also seeing some focus. So Just Dial is one of them. Then we have Tata Elxsi in other news flows, as well as Aavas Financiers also in other news flows, which is managing to keep up with some of the gains there. But like I was talking about the Nifty Bank, right? That's what we should start with because the index has hit record highs, and this is after the strong results that were reported by HDFC as well as ICICI Bank. Now, let's begin with HDFC Bank, which reported a strong beat in terms of estimates. Abhishek will take us through the numbers. What are the key highlights on that front as well?
Well, strong core operating profit was seen with respect to HDFC Bank. The P&L with respect to NI and PAT is a beat on our poll. Now, core operating profit grew by 20.5% YOY and about 4.9% quarter on quarter. Remember that by core operating profit, I mean operating profit without treasury gains. So, 7-quarter high net interest margin on total assets, which came in at 3.54% versus 3.43%. Even if you remove the one-off that they have over here with respect to 700 crore of one-time income, the 3.45, 3.46% that you have looks pretty good with respect to 3.43% in the previous quarter, as analysts were anticipating a decline in net interest margin, but it has actually improved for them. Cost to income ratio or operating efficiency is one of the best that you are seeing in the last 4 quarters. Annualized slippage ratio is at 5-quarter low of 1.15% versus 1.4% in the previous quarter. Overall, the slippages have declined by nearly 15% quarter on quarter. Asset quality continues to remain impeccable for them. Gross NP ratio and net NPA ratio have improved and are one of the best in the industry.
Thank you so much for that, Abhishek. But HDFC Bank CEO Sashidhar Jagdishan commented about how the bank will pace itself amongst the global macro uncertainty and plan with its key ratios in the upcoming financial cycle. Let's listen in.
We've already seen 2 rate cuts, and the change in stance from neutral to accommodative is a welcome relief to all of us. RBI intends to increase durable liquidity, which is followed by concrete actions, which along with rate cuts will help supporting the GDP growth. For FY26, we expect the GDP to be supported by a pickup in rural spending, discretionary consumer demand, and investment activity. Of course, the goods exports may be impacted until the global trade and tariff situation becomes far more clearer. We acknowledge that the global macroeconomic outlook has become more uncertain due to the recent trade tariff-related measures and the volatility surrounding them. This may potentially impact global inflation, leading to lower growth across economies. Corporates have adopted a wait-and-watch stance, and we are waiting for more clarity. We remain watchful. Our credit deposit ratio has been brought down from the highs at the time of merger, which was at about 110%, to around 96% as of March 2025. Our deposits have grown faster than the system, and so has it grown faster than our loans as well. Next year, in line with what we had committed, the adjustment in CD ratio will not be so steep, supporting the loan growth for the bank, but it will be on a downward path. Asset quality, one of our USPs, remains pristine. As liquidity and growth improve, we are well placed to grow in both assets and deposits.
Okay, now let's shift focus and talk about ICICI Bank, because that fared well in the fourth quarter as well. With more details, we have Abhishek here. Abhishek?
With respect to ICICI Bank, the loan growth momentum is weak. However, the PNL is very strong for them. Versus our poll, the NIN part is a beat on our poll. Deposit growth came in at 14% YOY and about 6% sequentially. YOY, it's one of the weakest growth that you are seeing in last 8 quarters. Now, advances growth were on the lower side at just 13.3% YOY and 2.1% quarter on quarter. So YOY, it's the weakest growth that you are seeing in last 17 quarters, and sequentially, that is quarter on quarter, you are seeing one of the weakest growth that is coming in 15 quarters. Net interest margin is at 5-quarter high of 4.41%. Core operating profit growth is at 5-quarter high of 13.7%. Now, quarterly annualized slippage ratio is at 17-quarter low of 1.5% versus 1.85% in the previous quarter. Their asset quality continues to show robust decline and is one of the best in last 10 years or even more for them. Gross NPA ratio and net NPA ratio have improved, with ROA or return on asset being the highest ever that they have recorded, north of 2.5% in this quarter. Back to you.
Okay, let's also listen out to the management of ICICI Bank on what they had to say post earnings at their conference call over the weekend.
So as far as the loan growth is concerned, I don't think anything specific incrementally in terms of caution on the credit side. I think we are pretty comfortable with what we are underwriting. Of course, on personal loans and cards, as you know, we had tightened, a few quarters ago, and that is showing up in the volumes over the last couple of quarters and the loan growth. But other than that, no specific caution on the credit side. I would say it's largely a function of what is happening in the system. And also, I guess, on the pricing side, some consciousness, given that, during this quarter, we were at the sort of cusp of the, downward movement in benchmark rates. We have seen liquidity improve substantially over the last couple of months with all the measures that the central bank has taken. And deposit growth for us has continued to be quite strong. You would have seen the numbers for the fourth quarter have also been pretty strong for us. So, and as the rate, now, of course, if you look at it, the repo rate has fallen by 50 bips. So that will start to see a transmission into deposit rates, which is what has started. So I think that's, in the natural course of things.
Moving on, with the fixed deposits and floats disappearing, banks need to cut their cost to income to 1/4 their current levels. Veteran banker KV Kamath tells Latha Venkatesh. She adds that hereafter banks must finance only retail loans given their short-term funds. Infrastructure and corporate capex should be funded by market instruments outside the banking system. Listen in.
Challenge that banks will face, are facing and will face, is cost-to-income ratio. So unless you disrupt that cost-to-income ratio to 1/4 of what it is today, you won't survive. 1/4. I'm saying if you cannot operate, you will have to be well below the 35-40% people are.
No, ICICI and HDFC
And some people are, are higher than that. Banks, I think, as they evolve, the larger and larger part will be to the retail sector, because they are, as of now, best equipped, unless they're disrupted by a fintech. The corporates, large part of the corporate universe today, are cash positive. The cash flows are positive and can meet most of their growth needs. At the margin, they may have to borrow. Large part of infrastructure funding will come through a market process, which is outside the banking system. It's already happening. Banking money is really, short-term saving deposits and some fixed deposits. And the average tenure of a bank deposit, banking system is about a year and a half. Yeah. And you expect to fund the infrastructure over 7 years or a corporate loan over 5 years. You are sitting on a mismatch, whatever you say. So it will have to evolve.
To corporate CPs and bonds.
And really, if you look at the lay borrower, the retail borrower, his or her need is to repay every month. And that's what you are collecting. And then you are in sync and you're repricing the loan maybe on a quarterly basis or half-yearly basis. So that is appropriate financing.
Okay, now let's shift focus and talk about gold prices, because the rally is continuing for this yellow metal. It's hit another record high level, and that is about the $3,390 an ounce. Manisha is here to tell us more on gold. What are we expecting going forward as well? Manisha.
Well, thank you for that. Those numbers on your screens are absolutely all-time highs for the global and the Indian markets as well. So we've done an all-time high of $3,395 an ounce in the international markets. For the Indian markets, until now, it has been $96,850. So rupees per 10 grams. So, well, absolutely making newer highs in every time zone. Asia started higher, Europe has followed in, and if the US were to follow the same suit, you could be looking at much higher prices beyond $3,400 an ounce as well. Well, the support in gold prices comes in from the fact that you are looking at uncertainty in the global markets. Well, that actually is a calculation on what really you would be paying in sense of gold prices in India. These are the prices which are not inclusive of GST and making charges. Once you start adding all of that, we are almost at 1,10,000 rupees per 10 grams for the Indian markets. If you were stepping out to buy gold today per 10 grams, whether it was a coin or jewelry, you'll be paying much higher than 1,00,000 rupees per 10 grams already. And the expectation is that with the kind of scenario that we are working with in the international markets, whether it is about the dollar index, which is trading at a 3-year lows at or below 99 right now, is a supportive factor. And then apart from that, Trump ordering investigations on critical mineral imports, or whether it has been about a statement of not being very happy with the US Fed Chairman Powell and a statement also of firing him. So these uncertainties clearly are adding premium, and a safe haven buying is happening only in gold, and none of the other asset classes has been supportive for the gold prices as well. So $3,400 an ounce, almost done. The banks and brokerages are keeping on and reiterating their higher targets in sense of gold there. Deutsche Bank has talked about 3,700. Goldman Sachs upped their forecast to $37,000 and $4,000 an ounce as well in this year, if the current situation persists or there is more extremities coming in there. And then you have Bank of America, Citi, UBS also talking at levels of 3,350 to 3,500 on the higher side. Swiss Capital has talked about 3,500. SD Bullion has spoken about 3,500 in the month of April to May itself. So, well, very, very bullish cues continuing even now.
Absolutely. So that's something we are watching out for in terms of gold, bullish cues going forward as well. But let's move on. And sources revealed to CNBC-TV18 that Eversource Capital is in talks with the ride-hailing firm Blue Smart for a possible acquisition. Parikshit is joining with us to give us more details on this front.
Well, yes, there have been talks between Eversource Capital, a private equity firm, and also Blue Smart for a few months now. But considering the situation where Blue Smart is in right now, with operations coming to a halt because of legal and financial irregularities at Gensol, Eversource believes, and many investors believe, that this may be the right time for the company to be acquired. So we believe that talks are on for acquiring a majority stake, and discussions are on to have a stake sale at around 850 crore rupees. No decision has been taken as yet, but we believe a final word will be taken, a final decision will be taken about 2 weeks from now. If indeed the sale goes through at around 800 or 850 crores, this would be 60 to 70% lower than the last known valuation of Blue Smart a few years ago. The company has many key investors such as BP Ventures, Stride Ventures, Mahinder Singh Dhoni, Deepika Padukone, Suman Sinha. All of them have been key investors of Blue Smart over the years. Let's see where things go, but Eversource is likely to put a condition about the key founder and board member Anmol Jaggi to step down and step aside from the day-to-day functioning of the company. And Anmol Jaggi has a 24% stake in Blue Smart. Let's see what happens.
Okay, surely we'll be keeping an eye out on what happens to that stake, which Anmol Jaggi is holding as well in Blue Smart. On that note, we're going to slip into a very short break, viewers. And after the break, we'll bring you the latest updates coming in as US Vice President J.D. Vance arrives in India. We'll tell you what's on the agenda after this short break. Welcome back to Business Lunch on CNBC-TV18. Now let's move on. And US Vice President J.D. Vance has arrived in India, and this is for a 3-day visit. Parikshit is now joining in with us to give us what's on his list of agenda. What can we be expecting as well? Parikshit, afternoon.
Well, the hope would be that both India and the US will iron out any differences that remain over the trade negotiations. Highly placed sources tell CNBC-TV18 that while the US government is seeking zero tariffs all across the board, India is willing to offer a concessional tariff of 10% all across the board. So let's see where things eventually fall. While Prime Minister Modi and J.D. Vance are not likely to get into the nitty-gritties, there could be an intention expressed by both sides to resolve the outstanding issues as quickly as possible and perhaps get an interim trade deal done. Having said that, issues such as immigration, defense, security, energy partnership are likely to figure prominently in the talks between the two leaders. We also believe there will be a discussion on the Russia-Ukraine war, the war in the Middle East, in Gaza, and the China situation. Both the US and India have massive trade deficits with China. There are concerns around China's approach to the world economy, Chinese approach to security, China's coercive and expansionist tendencies in the region, also in the Indo-Pacific and South China Sea. So all of that could come up for discussion. So it's going to be an important meeting whereby the entire comprehensive strategic partnership is going to come up for discussion. But of course, the big takeaways will only happen when Prime Minister Modi and Donald Trump speak. Prime Minister Modi is our leader, and J.D. Vance is the number 2 leader in the United States. But of course, J.D. Vance will be coming with a very important message on trade and also aligning our approach due to competition from China.
Okay, Parikshit. Thank you so much for that. Surely we'll be keeping an eye out on the more updates that come in from his visit here as well. But meanwhile, Indian officials will head to the United States this week to sort out issues which will enable both countries to negotiate a trade deal. Abhimanyu is here to give us more details on that front.
India's negotiating team is set to visit the United States this week to sort out pending issues before launching negotiations for a bilateral trade agreement between both the countries. Led by Chief Negotiator Rajesh Agrawal, who's an additional secretary with the Department of Commerce, the team will speak to its American counterparts for 3 days starting 23rd April. Sources have told CNBC-TV18 that India and the US have finalized terms of reference covering 19 chapters for a proposed BTA covering issues of tariffs, goods, non-tariff barriers, customs facilitation, rules of origin, origin and regulations. For a proposed FTA between India and the UK, the talks are moving towards final stages, with the sticking point being the issue of resolution of disputes between both the countries. Another full round of negotiations is unlikely as discussions are progressing at a fast pace between India and the UK. With the EU, India is discussing an early harvest agreement. The 11th round of India-EU FTA talks are slated to take place in New Delhi from the 12th to 16th of May. It remains to be seen how all these talks are going to pan out, even as the pause on reciprocal tariffs by the United States continues.
Thank you so much for that, Abhimanyu. Now, staying with the trade news that we have coming in related to China as well. China's Commerce Ministry has cautioned countries against making economic deals with the United States that could come at an expense of China, and this is escalating the trade war between the two global economic powers. Beijing vows to strongly oppose and retaliate against any country that makes such a deal. The ministry criticized the United States for misusing tariffs and pushing for reciprocal tariff negotiations, putting countries like those in the ASEAN, including India, in a difficult position due to their existing trade agreements with both the United States and China. And moving to the world of diplomacy, Prime Minister Narendra Modi is set to embark on a two-day visit to Saudi Arabia from April 22nd. He will be in the kingdom on the invitation of the Crown Prince. Trade, investment, energy and defense corporations are expected to figure in the Modi's meeting with the Saudi delegations. The two countries are expected to finalize several agreements to bolster cooperation. Prime Minister Narendra Modi and the Crown Prince of Saudi Arabia are also going to co-chair a bilateral strategic partnership council meeting. Okay, on that note, we are going to slip into a very short break. When we return, we'll bring you more news and updates, so stay tuned in. Welcome back to Business Lunch on CNBC-TV18. Now, in some international news update that we have coming in for you all, reports say that the U.S. Defense Secretary Pete shared details of the Houthi attack in another group chat that included his wife, brother and dozens of other people. Remember, this comes after the existence of the first Signal group chat that was later made public by the chief editor of The Atlantic. Other than that, also he was accused and allegedly shared some details of the attack to the second group chat, including details scheduled of the airstrikes. Some news from the World Economic Forum. World Economic Forum founder has decided to step down from the position of the chair and as a member of the board of trustees. The board has unanimously appointed Vice Chairman Peter Barbak as the interim chairman. Now, it has also established a search committee for the selection of a future chair. And on to some other sports and news updates that we have coming in here. The BCCI has announced its annual player contracts. Rohit Sharma, Virat Kohli, Jasprit Bumrah and Ravindra Jadeja have been given a A+ contract, while Shreyas Iyer and Ishant Kishan have returned to the central contract list. Shreyas Iyer featured in the B category and Ishant Kishan is in the C category. And moving on to some bit of a somber news that we have. Now, news agencies are reporting that Pope Francis, the head of Catholic Church, has passed away. We'll wait out for more details, but as of now, this is according to news agency reports that's flashing at the bottom of the screen as well, and this is according to AFP and what is coming in from the Vatican as of now. So in somber news is what we have, that Pope Francis has passed away, says the Vatican, according to agencies. And with that, we'll wind down this edition of Business Lunch at CNBC-TV18. Thank you so much for tuning in. Up next, your Mid Cap Radar.